Good morning, everyone, and welcome to another edition of the Big Joel Show. Exciting today. I've got one Nick Long from the great state of Florida, hails from Orlando, and I'm excited about talking to Nick today because I met Nick really when he was very close to at the beginning of his career as a loan officer and have gotten to really just see him just grow and explode. So let me just give you the bona fides real quick. Nick Long is Nick, you're actually a branch manager now, right? Is that your title? Producing branch manager?
Sales manager.
Okay.
Yeah.
Producing sales manager with Amerifirst Home Mortgage in Orlando. It's actually not you in Winter Park. Where are you?
Yeah, Winter
No.
Park, just on the
Okay.
outsides of Orlando.
Orlando, Winter Park. And 2016, 93 units for 18 million. 2017, 88 units for 17 million. In 2018, year to date, 100 units, 24 million, which is really awesome. I'm very proud of you. I love that. And so I want to talk to Nick today about a whole bunch of different stuff. He's amazing. Nick, how old are you? Tell everyone how old you are.
I'm 31.
31, a youngster, got in the business at 23. You all might recognize the name. His dad's Doug Long. He's been around for a long time. One of those classic kid gets in the business. Nick, I have one now too, by the way. My kid's a loan officer as well. So, I'm like, why did you want to do this? So I'm sure you've heard that before, right?
Absolutely.
Yeah, exactly. Generational business. And, Nick has built his business very organically. It's referral based with agents, but Nick is also does a lot of renovation lending. So I want to talk about that today because it's an interesting niche that anybody could get into in any market. And Nick has really taken that and owned it. And, any of you all know what, average loan officers do in a month, probably some of the best companies in the country, maybe 4 units per loan officer, maybe. Nick is obviously doubling or, more than doubling that in units. Really hasn't been in the business that long. I mean, really, when you look at average tenure for loan officers. And so Nick, Nick is married. And how old is the little person now?
She is turning 8 months this month. So
Wow.
on the 25th.
Wow. Is your mom bugging you already? It's like another one, another one, another one. You getting bugged already or no?
A little bit, but yeah, we're already ready for number 2.
Okay.
So,
All right.
yeah.
Awesome. And your wife is what type of nurse? What type of RN?
Pediatric oncology at Arnold Palmer in
Okay.
Orlando.
All right. So
Yeah,
she's busy. You guys are two busy people. So
absolutely.
Nick, tell people you're a young guy. We don't have a lot of young people getting in the business. Just let's start with, if you're a young person and you want to get into lending, first of all, the big thing now in lending is, technology is going to take over. There's not going to be a need for loan officers anymore. That's a bad business to get into, right? I mean, how often have you heard that? I mean, I personally think it's an incredible business. I think you probably do as well, based on the amount of production you're doing. But tell people, if you're a young person and you want to get into this, give people some tips for a young guy or gal or woman wants to get in the business.
I think first and foremost, you got to keep your expenses low. I was lucky enough to be living at home with my family at the moment, or at the time that I joined the business. So didn't have, rent payment or anything like that. So I think that's pretty key to have in this when you're starting out, because being commission only, it's not fun when, you're not getting a lot of deals through the door. So I think that's first and foremost, make sure you have your expenses low, make sure it's something that you can afford to do. Number 2, it's really just it's a sales business. So if you're personable, you can build relationships, you'll do great in this business. But that's really at its core. This business is all about building relationships. But also number 3, know your guidelines. I can't stress that enough. So many loan officers get in this business, they overpromise, underdeliver, and they end up ruining relationships long term because they end up screwing a deal up or saying the wrong things.
So let me unpack that a little bit, because the first thing you said, it's really interesting. People are gonna be like, yeah, whatever. That's not a good tactic. That's not a good tip. Who is this guy? The whole expenses thing. I have seen so many loan officers tap out. By the way, and real estate agents literally just tap out because they didn't realize that this is a long game. That it's a marathon. It's not a sprint, and they weren't prepared for it. And they thought, oh, I'm going to do this and I'm going to close 5 loans my first month. Why wouldn't I close 5 loans? Of course I'm going to 5 loans. Well, if anyone could close 5 loans in their first month, the whole world would be loan officers, right? I mean, it's
Absolutely.
a great job if you can close 5 loans every month, right? You're closing more than that, but I mean, it's a great job. But I have seen so many people tap out or not be able to do the stuff they need to be able to do. Not be able to go to lunch, not be able to, drive the right type of car, or not be able to put gas in their car. I mean, they literally, at 3 months are tapping out, not understanding that this is truly a long game. I mean, look, you're 8 years in, you closed 100, you're closing 100 units this year. That's a lot of loans, by the way. Okay,
Yeah.
that's a lot of production. That's a lot of loans. But you and I both know the way your business is built. Next year it's going to be 130, and the year after that it's going to be 160, and the year after that it's going to be 190. It's not going to go 100, 200, 300. I mean, doesn't happen like that. So I just want to make sure everyone heard that, and that you didn't just blow over that. If you're going to hop in this business, and by the way, all of us in the business or, that know about this business, we want young people to come in, real estate and mortgage. It's great for the business, but you have to be prepared and you got to be able to have the money saved up, because I kind of look at it at the beginning like you're almost getting a master's degree and you got to pay for your degree a little bit. Is that a good analogy, you think?
Yeah, I mean, it really takes a solid 2 years to get a steady flow of production. And so, I mean, the typical loan officer roller coaster in sales tends to happen within those 2 years. So if you're not, budget conscious, you spend all your money and you don't have a savings account, it's really going to be difficult for you those first couple of
And
years.
you're going to tap out. And
Yep,
by the way, there's no part-time loan officering. It's full-time. There's no like, oh, I'm a
100%.
bartender 4 nights a week and I'm a loan officer. That typically is a fail. The second thing you said is it's a relationship business. I say to people all the time, look, you're looking for people that you like and that like you. If you're personable, you're good to go. And people say, well, Joel, why do loan officers fail? And I say the number one reason loan officers fail is they don't want any new friends.
Yeah.
So if you're listening to this right now and you think I'm going to get into this because I'm going to cold call 400 people a day and get 2 people to say yes and get 1 person to give me a loan, you should go literally work at a call center. This is not retail mortgage banking like what Nick and I are talking about right now. This is not for you and you will not like it. You genuinely have to like people. Again, that's a big message. It sounds like a little message, but that's a big message. And then number 3, the classic know your guidelines, which you hear that from. I did a podcast a little bit ago. I don't know if we released it yet or not. Some guy doing 30 loans a month or something, a guerrilla loan officer. He's saying the same thing. Yeah, know your guidelines. And I'm like, yeah, that's basic. He's like, no, that's not basic. People are blowing stuff up all day long, and it's just allowing me to swoop in. And just take their business, build a relationship with the agent because they didn't even look,
Yeah.
So tell people, I mean, how do you learn the guidelines? If you're a younger loan officer, how do you learn them? I mean, it's like trial by fire. I got a master's in mortgage banking, right?
Yeah, I mean, really, when it comes down to it, it's about experience, but also just asking people in your office as well, getting to know other loan officers, get them to run some scenarios with you, or just sitting down with one of your underwriters and seeing, what they think about a transaction. But I mean, the guidelines are printed, out there. If you really want to be in this business, just sit down, read the guidelines, get to know them, and live and breathe them. And next thing you know, you'll be a master at them. So
Yeah, yeah, and I think that while I think that agents, and I think you'll agree with me, they're sending you business because they like you and they trust you. Knowing the guidelines is like part of that, but when you know the guidelines, you can have conversations, even if it's a one-off, with agent partners, and they just know. They walk away and you're like, okay, that guy's a pro. Like that guy, like no one else asked that question but him. I mean, that was my whole thing when I was, originating loans. Is I was the guy. Maybe an agent would say, "My God, Joel, it's enough already. You asked too many questions." I'm like, "No, actually, I didn't, because you want to get them in a house, and I need the answer to every one of them. They're not extra questions. Like if you want to make sure they get a mortgage, I need to know that stuff.
yeah, I mean, most loan officers they don't take the time to ask the important questions. They just take the information, spew out a rate and a cash to close, send you out a pre-approval letter, and that's it. They don't deep dive into, why you're buying this house, how long you're going to be into it, other stuff like that that you can ask on the front end, and it can really, help alleviate any problems, throughout the transaction. And it also, helps set the proper expectations for the transaction as well.
And it enhances the relationship huge with your referral partner, because those
Exactly.
people are going back to your referral partner and saying, thank you for referring me to that guy. I like him. Wow. And they like you, not because you're the greatest guy in the world. They like you because you made them feel very comfortable. That's just pure psychology. You made them feel so comfortable. Therefore, I like that guy because he made me comfortable. So tell us a little bit about your business. Tell us about what you do every day. I definitely want to talk about renovation stuff because I know you're a master at that. You're a pro at that, and you've really dived into that. You've made that something that you're great at, right? In Orlando, people know, and a pretty big percentage of your business right now is reno, correct?
Correct. Yeah.
Yeah. All right. So tell everyone, first of all, the mystique around reno is, everyone's scared to death of it. I look at it like it's an FHA loan with 5 different pieces of paper. I mean, it's just not that complicated, but the agents are scared. The loan officers are scared. Nobody wants to mess with it. And I look at it like, wow, what a cool way to get in, because if you can do the reno loans, you can do all the loans, not just the reno, you can do them all. Right. Yeah. So talk to me a little bit about that.
Yeah, so when I started in 2011, that was really all that was out there. What it seemed like mostly every single home was a REO, bank-owned property, short sale, needed repairs. So, I figured if I'm not learning the renovation loan program, I'm missing out on a lot of business. And so I really just became an expert at it, wanted to know every single nuance of it, and also wanted to make those nuances, an easier process. And so I think when a lot of loan officers, they don't understand a product or they've never done it, they kind of get scared, and then they don't sell confidently. And when you're not confident, the buyer's not confident, the agent's not confident, and it makes the whole transaction even worse. But renovation loans really are not that complicated. Like you said, it's literally an FHA loan or a conventional loan. Only difference is you got a contractor involved with a bid and an after improved value on the appraisal. That's really the two biggest differences between a regular loan and a renovation loan. But they are definitely complicated. But at the same time, I took the approach that you said, which was, if you know how to do renovation loans, you pretty much know how to do every single loan out there, because the renovation loans are the hardest loans pretty much out there to do.
They have the most bells. They have the most things going on with it, for sure. So if you can do one of them, it's like when I started, just became like a master at doing a VA loan, with all the different stuff. And you do a VA loan, then you master at FHA loan, like conventional ADLTV. I mean, please, that's a joke. And that's easy, comparatively to, everything else you're dealing with on a typical Govy. Now, have you become a master at any kind of reno? If it's a reno, it doesn't matter whether it's Fannie, Freddie, every product. Because now there's, it used to be FHA was really the only game in town. And now, the big agencies are in there.
Yeah. The conventional loan, renovation loan product is definitely a good one as well, especially here in Orlando. We've had a explosion of growth here. There's so much new construction. There's a bunch of old inventory that people can get a really good deal on. And a lot of the houses, because of so many people moving here, have increased, which have gone over the FHA max county loan limit. So pretty much only leaves us with the conventional renovation loan to work with. So yeah.
Interesting. Really so you had to pivot. You had to pivot right over there, because you went from 100%, doing Ks to boom. Now you're doing whatever, Fannie Ready, whatever they're called. Different agency programs. So tell us a little bit about, so you're I would call you a master at Govies, at Reno products, but I also know how you're wired. I know how you're wired because I met you when you were younger and I got to spend time with you, and I was a little bit of the wiring. I think I was probably in your head a little bit, so I know how you're wired. And there's no way you got to 100 loans just doing reno loans. So you obviously are converting, some of these agents that may have gotten to you because you're Nick Long reno guy, okay, and then said, hey, I'm Nick Long reno guy, but I'm Nick Long mortgage guy, right? Yeah. So talk about that a little bit, because that's something that all loan officers can do. They can become an expert in something, and then they can pivot. They can pivot right off it into, well, wait, what, why wouldn't you? I can do that VA loan. What? Of course. I don't just do this, and a lot of times reno for years in the mortgage business has been, well, you're reno or you're not. And I've never agreed with that. No. I do all loans,
Yeah.
So talk about that, because I think that would be really interesting for people to hear, because I'm sure you're doing that. Because am I correct?
Yeah, absolutely. So, I mean, a lot of times with new relationships, what I would do is, I'd tell them, look, I'm just a renovation guy. I'm here to help you, expand your business. Have you ever heard about this product? Majority of the time they have. But, I'd explain it to them as a way to help them sell more homes and show less homes as well. And, once we get through a renovation transaction.
So Nick, stop, because you just said something really cool. I just want you to unpack it. How they could sell homes or show less homes. Let's go down on that. No, let's go down on that, because that right there, that people will watch us go, ooh, okay, because I know where you're going to go with that, but I want you to tell them. Okay?
Yeah.
So back that up.
So I mean, the typical real estate agent typically shows anywhere between 10 to, I've even, had real estate agents tell me they show 30, 40 plus homes, which is just
insane,
outrageous. I mean, you're going to spend your commission just on the gas money.
Yeah.
So, if you can get down to the nuts and bolts of what they actually want to buy, where they want to buy, location, neighborhood, that sort of thing, you can narrow down a home that may not fit every single checkbox that buyer wants, but with a renovation loan, we can make it to the house that they want. And so it can check all their boxes with that home. So it gives that real estate agent, the ability to show less homes and give them more time as well on their hands, and to get more clients and not be as busy just showing a bunch of
I'm going to unpack that even more, okay, for everyone listening. So basically what Nick is doing is, when he's meeting a new potential agent partner, or maybe someone he's just starting to work with, he is taking the time to teach them how to use renovation financing to sell houses quicker, and to have to show people less houses, because, someone could like a house in a specific neighborhood, in a specific school district, but when they get in that house, they're not going to buy it because there's purple carpeting, or because the bathroom and the kitchen have not been redone. Okay, but when an experienced agent understands the product and can put the people in front of you, that's the most important thing. Look, you need to get on the phone with Nick right now. We need to make sure what you can and can't do. How much we could do in here. But just so you know, if you love this neighborhood, this house doesn't have to look like this, and you don't have to write a check for $4 million to do it all. There are financing options for you to do it. I just wanted to really, I know exactly what you're saying, but there's loan officers and even agents that are going to watch this that wouldn't necessarily catch that going through. You want to go further on that, or did I nail it? Meaning what you're telling them.
It.
Okay.
Yeah,
okay. Because that's what you're doing, right?
Yeah.
It's kind of like telling an agent, one of my, one favorite moves, you got a dog listing. Look, if a listing's sitting around for any period of time, it's overpriced or a dog, right? There's nothing in the middle. Overpriced or a dog. That's it. It's the fair market, right? Either people want it or they don't. And, and to put in your listing, this house is reno ready. I know that terminology. Reno ready, meaning you can do a reno loan on this. It's, the loan amounts and, the sale price is in line. You can make this house look way prettier than it does. Move the house quicker, Okay. So then you, how are the agents? So tell me right now, what are you doing right now? Obviously you probably have a pretty, a decent sized book of business, if we did platoons and division and all that old school Joel stuff, but how are you, adding new people to the flock? What are you doing? Tell people, oh yeah, he's doing 8 loans a month, 9 loans a month already. I'm only doing 2. I can't do that. Well, no. Let's walk it back through. How did it build up like that? What did you do? Talk about the activities.
Really, when it comes down to it, it's building that trust factor with that real estate agent. I use the renovation loan as really a way to help build that trust factor as well. Just because there's so much involved in that transaction, and we communicate throughout the whole entire process, that we end up building a relationship naturally just through that one transaction. Typically after the transaction, that's when I'll try to further deepen the relationship. I always mention that we do regular loans also, but typically what I'll do is I'll try to just deepen that relationship, meet with them multiple times, try to stay in front of them as much as I can. Let them know, look, let me be your backup lender. If your primary lender won't approve something, and you think it should be something that can be approved, send it over to me. Let me take a look at it. No harm, no foul. And I kind of just take that approach, and we typically we'll build a relationship from there, and we try to then make things more seamless for them as well, in terms of like getting them to get more homes, and also be able to sell more homes with different loan products as well, because a lot of loan officers out there really try to fit borrowers into one particular loan program that they're most comfortable with. So it's typically what I'll do with a particular real estate agent.
Okay, so you are clearly that's an open door to a new relationship, and there are a lot of agents that think, oh, that's the reno guy.
Yeah.
It's very, very, very
I get that a lot.
common.
I
Yeah,
get that
of
a
course,
lot.
of
Yeah.
course. Oh, that's the reno guy, and hey, it's great to be the reno guy, but you want to be the all guy. I mean, why just be the reno guy? Why do 8 loans a month? I mean, I know who you are. You want to do 30 loans a month. You know what I mean? So the doors open for that with reno. And if I heard you correctly, just to paraphrase it, because of the reno loan is we'll call it labor intensive. There's a lot of moving parts. It really allows. It's a big opportunity for you to dive in there and connect. And those of you out there listening to this that do reno loans and are that reno guy, understand, a lot of those guys kind of take the tack of they're a little hands off with the agents. Like they don't even want to leave me alone. I'm going to get it done. They're very transaction related. And I look at that as a massive opportunity. If I'm a loan officer out there and I can't do a certain product and another guy can do the product, and that guy's now talking to my partner, my friend, whatever, that's I don't necessarily want that, and you have that opportunity probably all day, every day, right?
Yeah.
All day, every day. Now, how many agents do you think we'll call it over a couple of year period, have you converted over from Nick the reno guy to Nick the everything guy?
Well, I'd probably say over the last couple of years, I'd probably say at least 10, that we've started to build relationships with, get steady referrals. But most real estate agents, they typically sell anywhere between 4 to 6 homes is, I think, the average. So, I'm trying to build that number up, but typically I would say within the last 2 years, probably 10 to 20 real estate agents.
Okay, so tell people. Let me hear about some of your activities. So what are you doing? You've heard me say it a million times. Stand up, turn around, look at your chair. If it looks like an imprint of your butt, you have a problem. Meaning you shouldn't be sitting in it all day unless there's a stack of $1,000 bills underneath it. There's not.
Yep.
You're not going to make any more money sitting in that chair. What are you doing when you're getting out of that chair? What type of activities are you doing right now with your agent partners, just in general?
Well, we try to, I try to schedule as many appointments in person as I can. This is like the most difficult transaction that someone will go through, biggest purchase as well in their life. So I think it's extremely important to meet people face to face. I try to get as many buyers face to face as I can, but I also took the Joel approach, and I try to get the buyer to go to the real estate office as well and try to take the application there. If you want to get hit, stand in traffic. So, that's one thing I try to do also. But we also try to put on as many like seminars, first-time homebuyer seminars. Our market is filled with millennials and first-time home buyers, and so we try to reach as many young people as we possibly can. So, we try to put on first-time home buyer seminars and lunch and learns and
Well,
and things along
you're
those
one of
lines.
them. Those are your people. They're your people.
Yeah.
You're one of them.
Yeah.
So let me go back to that. With all the technology we have today, okay, and every company's got technology. I don't care whether you're tiny or whether you're huge, the big guys or the little guys or the middle guys. It doesn't matter. It's all kinds of technology. And you just said something that a lot of people are going to be like, wait, what? And you just said, I like to get in front of as many people as I can. And what most loan officers will say today is, I like to get them into my mobile app so they can pull their own credit and put their stuff in as fast as possible. And when I do like a consult, I do a lot of stuff, Nick, where people will bring me in for the day with a team. And I'll be sitting with their team and I'll literally be walking through, okay, the lead comes in, tell me what happens. And they'll go, oh, I'm like, no, stop. I want to hear what you say to the customer. Like, what are you doing? It's like a 4-minute conversation, and there's a standard email that they cut and paste out of their phone, and they get the link and they say, fill it in and we'll call you back. You know what I mean? Meaning, get in there, get your credit pulled, get all your crap in there, and then I'll call you back. And I immediately say, whoa, stop. Wait, what are you doing? Hold on a minute. This is the biggest, what is it? Death of a family member, divorce, and buying or selling a home, right? This is the third largest transaction thing they're going to have like in their whole life from a stressor perspective. Why would you not spend more time with them on the phone, or go even further? Why would you not want to get them actually in front of you to really, bond with them? So number one, you make your referral source look awesome. You make your partner look incredible. But number two, you really bond with the person. It's a lot easier to do it. So in your mind, there's a lot of people who are thinking, they're listening, well, I don't have time for that. I mean, why would I? And you just said, well, if you want to get hit by a car, stand in traffic, right? Well, if you want to meet agents, go where they are. So you're combining the two, and you're trying to meet your client, your new client, actually in the referring agent's office, which is a great thing to do. Honestly, agents love it. You're in their domain. The person that referred it to you, they typically love it as long as there's a conference room available. Sometimes it's a problem with the in-house lender, and they get a little upset if there is one, but that's not your problem, right?
Hey.
That's exactly right. So I want to make sure everybody heard that, and don't poo-poo that. Oh yeah, well, he has time. This is real. If the average loan officer closes, 2 loans a month or whatever, 3 loans a month, you have time to do that. Don't tell me that you don't, have time to do that. Tell me about the seminars and stuff like that for the younger agents, even the older agents. I was making fun and said, you are one of them, but you're a young professional. You are. Yeah. So is your wife. You guys both are. Tell me about that a little more, instead of, don't gloss over that, because that's something people try to do all the time. They fail, or they do a couple, 3 people show up and they don't do it again. So tell me about that.
Well, I mean, it's all about, finding people to market to get in the door. I mean, you'll get people who RSVP and never show up. So it's all about building a relationship there first, getting them to come to the seminar and encouraging them to come to the seminar, just so they can learn more about, their financing options and the steps of a typical transaction and how to get from, pre-approval to the closing table. So, I mean, there's a lot of information that we go over in those seminars. Typically we'll try to have a title rep there, even a homeowner's insurance person, and just thoroughly explain the process to them. So it makes buyers feel more comfortable moving forward, just because there's so much misinformation out there on the internet, and just
now,
other people tell them.
Are you taking every tire kicker, every single call you get, no matter what they do, holding on to them, and then you are back marketing those seminars to those people? So even if they're just a tire kicker, or maybe you pulled credit, their credit score was low, whatever, they're going to hear from you. Even if they can't buy for 2 years or whatever, that's going to be a core that you're hitting, right? Hey, first time buyer seminar at the public library at the whatever time. Where do you normally do them? When you do them?
Well, typically we have a pretty big conference room here in our office, but there's also an insurance company local as well that we'll do it at, or just in the real estate office as well, is typically where we'll hold the seminars at.
How many people are you getting at them, and what's sort of the, how long does it take for people to actually do something on average? If you get 20 people there, do two people do something in a couple months? What does that look like? It doesn't have to be exact.
Yeah, typically you'll get anywhere from 8 to about 20 people in there. It depends on how well you market it, but I think the lesser the crowd, the more personal it is, and I think it will help your conversion rate. But out of those, say 8 to 20, it's probably about a 20% conversion of somebody buying within the next couple months. But most people, it takes them a very long time to pull a trigger on a house. They start to want to buy the house for whatever reason, and are they know they want to buy a house, and then something happens, they put it on the back burner, and really I think it's just staying in front of those buyers and having a good database and actively marketing to those people really helps real estate agents and loan officers convert more deals, and helps people get off the fence about buying a house. Because in our market, with increased interest rates and the increase in housing pricing here in Orlando, I mean it's a no-brainer to go ahead and buy now.
Are you calling, emailing? How are you staying in front of everyone?
We usually do emailing whenever it comes to a seminar. If someone expresses interest via email, that's when we'll actively call them, or text, all that kind of stuff is what we'll typically do. But majority is email.
Okay, but you are collecting everyone and you're putting them someplace so you can stay in front of them. Sort of, I'll call it a
Yeah.
long tail. With a long tail, I mean, they may not buy for a year, but that's fine. But they have the option. They know they can get to one of your seminars, like no problem. They're going to see it,
Yep.
even if they're not ready, they can go and learn more.
Yep.
Right?
Absolutely. Yep.
Okay. So tell us, moving forward, a little bit. Your market, has it cooled? Is it in the middle? Is it here's what I'm hearing pretty much. First time buyer stuff is leaning a little bit towards still a seller's market, to the middle of the range. The move up buyer is becoming more of a buyer's market. That's what I'm hearing across the board. What is it? What are you seeing in Orlando? Is that right on, or is it a little different?
Pretty much. We're pretty much experiencing the same thing. A lot of people that bought in that post 2008 era that have a lot of equity, and they're sick of the house now. We're getting a lot of move up buyers, which brings us into simultaneous closings, which is a whole nother headache to go through. But we're getting a lot of move up buyers, but we're also it's starting to come back to a buyer's market. I think we're starting to level out a little bit on our pricing of housing. We really skyrocketed there in 2017, and a lot of this year as well. But I think we're starting to see a little bit of a cool off, but at the same time, pricing is still on the upward trend.
All right. Nick, let me just recap some of the things. I'm looking at the clock here. We're running out of time. Getting into the business young, like Nick did. Interesting. First thing he said, keep your expenses low. I personally love that. People are like, that's not a good tip. Yeah, that's the best tip you're going to hear, by the way. This is a relationship business. If you don't like people, don't bother. Know your guidelines. And the other thing you said, you pulled it out of the bag and you said it. You said it's going to take 2 years to get traction. And, it's interesting you said that. I'm sure you've heard me say this before. If you want to get paid like a surgeon, you got to do a residency. And when you do a residency, you got to live in the hospital for 2 years and pretty much get paid nothing. So if you think you're just going to come in and just knock the cover off the ball, I mean, it might happen. It could happen. It happens with some people, but it's not really a reality. And you need to be able to settle in for the long haul. You said something else that I just want to finish with, which is huge. And I forget exactly how you said it, but you used the word confident. You did a whole little thing on confidence, and people can listen to this and hear it again. But something like, if you're confident, then they're confident, then everyone's confident, or something. If you're not, you're not. And then no one's confident, and then everybody is freaking out all the way through. And confidence is something that really has nothing to do with your experience level. It really doesn't. You being a confident person is a different thing. And as you listen to this podcast, I want you to think about that. Are you operating in a confident manner? Now, obviously, knowing your guidelines makes you a heck of a lot more confident, but right. I mean, but are you operating in a confident manner? I mean, as a loan officer, when you're alone with a referral partner's client, and they start getting fidgety at 8 o'clock at night, what are you going to do? I mean, are you going to pee yourself? You know, because if you are, you're not going to get a lot of referrals from agent partners because they don't want their person in a room with you at 8 o'clock at night, you know, going through fees and you pee yourself. That's not being confident in any way. And, you know, the best loan officers are the most confident loan officers, not the cockiest, the most confident. And it's the same thing with real estate agents. It really is. And confidence isn't a bad thing. It's not like big ego or whatever. It's you're confident. You know what you're talking about. So Nick, I listen, I really appreciate you spending time with me today. Even the gyrations of getting the camera right. Nick's remote from coming in from Orlando. I just flew in from Jacksonville yesterday. It was like 48 degrees. I'm like, I'm not in Florida. What is going on? So, you know, I'm like, who called the weatherman? But I appreciate you messing with the camera and, you know, spending some time with me today. I really do. Thank you so much.
Of course, my pleasure.
All right. And those of you that are watching this, listening to this, please, you know, go on Facebook and share it with your friends if you like it, or wherever you consume podcasts. Please give us a like or give us a comment, you know, YouTube, iTunes, Vimeo, wherever you go. We really appreciate it.